Hello everybody. I want to give you a little short video on how to calculate the federal income tax. And we're going to calculate it using two methods. One is using tax tables and the other is using the tax rate schedule. So there are really two simple methods to do it, and I just want you to understand how we're going to do it. Now, we're going to use an example. We're going to calculate the tax liability using the tax rate table and the tax rate formula. We have taxable income of $55,000 and the filing status is married filing jointly. Now, it says the taxable income is $55,000. And remember, when you hear that, the taxable income, that means they've taken all the deductions. They've taken their standard deduction or the itemized deductions. They've deducted their exemptions. So there's no need to adjust that number. 55,000 is the taxable income, and we're now for a couple with a status married filing jointly. And now we're going to calculate, how do you calculate the tax due on that amount of money? Well, if you use the tax rate table, it's very simple. The IRS will have these in their publications. You can use a master tax guide or a publication 17, like I have here, a pub 17, if you can see it. And you can go right to the tax rate table there and look it up. You look up married filing jointly and look up the amount of tax, which is $55,000. And you can see for 2013, the tax will be $7,361. And for 2012, the tax is $7,384. So 2013, the tax rate went down a little bit, but that's a simple way to find out what the tax is just by going to the schedule. But let's talk about the tax rate schedules. Well, what do you do then? Well, then you have to calculate it out. Here's 2013. So we know the first $17,850 of taxable income is taxed at 10%. And that's what that tax is, $1,785. But we have $55,000 of taxable income. So the first $17,850 is taxed at 10%. So the remaining amount is taxed at 15%. And that tax is $5,573. And what's the total tax? $7,358. $7,358, tax table, $7,361. Pretty close. Very close. Here's 2012. Different rates, $17,400. The first $17,400 of taxable income, the tax $1,740. But we have $55,000 of taxable income. So you take the $55,000, subtract out the $17,400 taxed at 10%, and the remainder is taxed at 15%. That gives you $5,640. Total tax $7,380. That's for 2012. $7,380. What is the schedule? Tax rate table, $7,384. Very close. They're going to come out to very close the same, not much difference. And additionally, I also wanted, so that's how you calculate the tax on $55,000. Let's talk about two other things. The marginal tax rate. The marginal tax rate is the rate that will be applied to the next dollar of taxable income. So what's, in this case, what's the marginal tax rate? The next dollar of income, 15%. That's what it is. That's the marginal tax rate. What's the average tax rate? Well, in this case, if we said the tax is $7,380, like it was for 2012, and we divide it by the taxable income, $55,000, the average tax rate, 13.4%. So that'll give you a quick review on how to calculate federal tax, what the marginal tax rate is, and what the average tax rate is. Take care.